Alright, welcome back everyone. So we're back with the weekly update video. We got a lot to unravel really this week, with inflation going down last week, to some technical analysis, possible weekly breakout coming this week, and then also some really big macro environmental things we need to really watch for. Alright, so last week we had inflation or CPI data come out. We're continually seeing this inflation trend lower. This is good. I said multiple times that I wasn't on the bandwagon of inflation is getting over with and everything, but I'm starting to really start to trend that way. We're seeing that inflation really start going down now. Even though it did not get lower than forecasted, it was still lower than it was last time, which means we're continually seeing this down push of inflation. Now, we also had initial jobless claims. We're continually seeing the jobless claims lately kind of trend a little bit, not really laying off as many people or not having as many jobless claims in general. So we're seeing that labor market strength, along with we know that it's tight, but we're still seeing how that strong labor market and how it's keeping our economy tight. And then also we saw on Friday the University of Michigan consumer sentiment came in at 64.6 when it was forecasted at 60.7. So we're seeing inflation kind of get put in that rearview mirror, and we're starting to put all of our focus really on the recession or possible recession. Now, every economic data that we have coming out now is going to be focused solely on how the economy is doing. We're no longer good news is bad news and bad news is good news. We're now focused on good news is actually good news and bad news is actually bad news, due to the fact that it could possibly, the worse our economic data comes out as, the more possible it is that we could have a worse recession and that soft landing goes away. That's really kind of where this market's it's very vulnerable right now, due to the fact that we're very data based in general. Alright, so here's the weekly outlook that we have. Of course, market was closed today due to Martin Luther King Day, and tomorrow we have the Empire State Manufacturing Index. I don't expect anything crazy tomorrow. Possible lower volume, just for the fact that we have a 3-day weekend holiday, and also there's not a whole lot of economic data to push the market. Now, on Wednesday and Thursday, I expect higher volume, higher volatility. We have retail sales, PPI final, industrial production, and then we have that home housing data come out the rest of the week. So I expect the half to the end of the week to have more volume, more pushes, but I'll talk a little bit more about where I think ranges will be in just a minute. So here's some macro environmental things to really watch for this week. I don't think the first one's going to be as big as the second one, but we have China's COVID fever and emergency hospitalization has already peaked since the ending of their zero COVID policy. So if you remember the zero COVID policy, it was causing havoc with possible supply chain issues and everything. Well, now you're seeing COVID really spark more in China. Now remember, all of this runs on uncertainty in the markets, and that kind of hurts that push that we've been seeing, that bullish push that we've been seeing lately. So kind of just keep an eye on that, but I don't really expect that really to go too far. Now we have the debt ceiling. The debt ceiling on January 19th is expected to run out, and I said a couple of weeks ago, if you remember, a Republican House and a Democratic president has actually been the bullish for the in history for the market. And of course, we've seen the midterm year has normally bearish, but we also had inflation and everything. And this year is historically bullish. The year before the presidential election, the year after the midterm. So that third year, we always see a very bullish push, we're seeing that bullish seasonality. Problem is, though, we have a lot of macro environmental problems, along with possible recession fears that could possibly put a damper on this year. So what is a debt ceiling, and how can it happen, and what happens if we don't raise it or do something about it? Well, so debt ceiling is you raise that debt ceiling, the government pays off these loans over time. Well, Every now and then you have to buy, yeah, they have to raise that debt ceiling. The debt ceiling has grown insanely since the year 2000. I think it's at like 18 trillion right now. Well, we run out on January 19th. What happens if we don't raise that debt ceiling? Well, the problem is even though the market is bullish seasonally for a Republican House and a Democratic president, it can cause, like we see right now, political problems. They won't agree exactly on how high to raise it, if we should raise it or anything, and this could cause problems because if we don't raise the debt ceiling, we could default. Default just means that you don't have the funds, or you can't, or that the government can't pay on these loans. What could happen if we defaulted? Well, we could see bond market absolutely fall due to the fact that the government can't repay these bondholders. We see yields absolutely skyrocket, the stock market plummet, and we could see a lot of layoffs in general from all of this. So it's not a good thing to default in a country at all, by no means. And this is something that I'd really keep my eye on if I was everyone, just in general, because this can blow technical analysis. News like this can blow technical analysis out the water. And I believe if they decide that they would raise that debt ceiling and we get that news, we could see a bullish push because of this. So let's go ahead and look at some technical analysis here. Alright, so looking at SPY here on the weekly, we can see that we bounced off of these two Fibonacci levels. If you don't know what Fibonacci retracement is it's from, you just mainly you pick a point, normally like the high of all-time high. I have one for the weekly, which is the all-time high from that we peaked in December of 2021, and then all the way down to the COVID lows. You pick these two massive ranges, the top and the bottom, and then those in between are those levels of support and resistance that you can use. Now, you can see right here that we were very close. The weekly and daily were very matched up, very close, a couple of dollars off, and we were bouncing around this range. They tend to sometimes just kind of bounce, consolidate around those ranges as well, and then we caught support and bounced back up. So you can see that the STOXX RSI and the MACD on the weekly both have a lot more room to run up, and we possibly could see this final bullish push and break through on this bull flag on the weekly. Now, if we do this, remember most stocks, ETFs, or in the stock market, they almost always come back for that retest. So after that retest, I will be looking to see if we find that support. If we do find this support, I will be playing long then. Looking at QQQ here just real quick, you can see right here we have this pretty much this base support that we've been bouncing off of. We continue to bounce off of it, and here's this weekly resistance just like SPY. It actually has a little bit more room to go around 289 level. If we get to that 289 level, that's where you'll be hitting resistance. But again, this MACD is way low, and this STOXX RSI has a lot more room to run up. It is not overbought, it's not oversold. Now, remember, I think a lot of it really decides on the data that really comes out, and along with that macro environmental news. Technical analysis can get trumped by any news that happens, but they can be used for good entry and exit positions. Now, looking here on Apple, we're on a we're in a very big bull flag here on the weekly. Here's my short-term resistance if we continue this uptrend around 139, 140 range, but this STOXX RSI and the MACD again is also very oversold. We have this main bottom base support that we were bouncing off of. We caught a couple times. We bounced below, but we caught some bids. And if we do continue to see that bullish push, I'll be watching around 139, 140 for that major resistance. Looking at STOXX 50, so you have this very, very big major bear flag. Now, again, this is on the weekly, and I haven't done any DD on any or due diligence for anyone that doesn't know what that means on any of these stocks. I haven't had a whole lot of time, so just looking at a pretty clear view is I'm bullish. we're getting a little bit into the overbought area on the stock RSI, but it can have a little bit more push. You have a little bit of a demand zone right above this, along with some kind of major resistance where it kind of consolidates and then heads back down. But that weekly MACD could see a little bit more trend. I would watch this major support line that I made for the daily. If we do break that daily support line, I would possibly go at least bullish or bearish until we either hit this major support line again, or we possibly come back down and bounce off the support line. All right, now looking at gold, I am bullish on gold. It still has a lot more room in the MACD to run. We could see a pullback though. Stock RSI has been overbought for quite some time. We've seen some really bullish pushes in here. My first level I would watch as resistance would be this one right here, 178, 179. I'd like it to pull back a little bit to regain some strength and then kind of come back and push again. If we do push above that level, come back for the retest, find that support, I would watch around 193, 194 level. All right, now looking here on the last one, apps, APPS, or Digital Turbine. I am, again, short-term bullish on this. We could actually see a pullback a little bit with the stock RSI being a little bit overbought. We have on this daily, we're right here above this, right above or right below this major resistance. If we do see a little bit of a pullback, I would watch around 15 to 16 range and see that support. Daily MACD is in the middle of it. We could see a serious bullish push if we break out above this major resistance. So that's mainly for for the TA for this week. If we do break out above this level for SPY short term, I'm watching 410, that's where some major resistance is. You can see where it hits multiple times. 410 to 413 would be a major resistance. If we don't break out on the weekly, I'm watching that 390 to 380 level yet again. We could see a serious swing this week again with the debt ceiling. But if you like this video, please don't forget to like and subscribe. Thank you to all my followers and everything. And if you have any questions, feel free to drop some down in the comment section. And God bless.